Hello everyone, and welcome back to our Forex session. Normally we have this at the London Open, but we've done something a little bit different today. It's lovely to have you join us, and it's lovely for us to be back as well. We've had a slightly longer break than usual for the Christmas and New Year. There've been all sorts of reasons for that, one of which is because we're actually working on the modules for the stock trading and investing program, and fascinating it has been too. We're going to talk a little bit about that in the next session. When we come to the end of this one, we've got a 50-minute break, and then we're back again for the stocks and looking at the indices. Although, having said that, as you know, those of you who are on our program will know, we look at all the markets, not just at the chart that's in front of our eyes. We do like to see what's going on in terms of sentiment, because that obviously has a direct impact on the individual currencies and the currency pairs. But before we start, as usual, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. I know we have some of our students here. I know we have some of our quantum trading users. I know we've got some new people as well at the start of the new year. So I'm going to go straight on to the charts, and the way David and I look at the markets, trade the markets, invest in the markets, is we do it through the prism of what we call volume price analysis, which is this relationship, very intimate relationship between the price action and the volume. And on this occasion, we are looking at the up-down, what we call the up-down volume at the bottom of the chart, but we also look at the volume in terms of what we call which is derived from the volume point of control. And this is actually, it's on the y-axis of the chart, and it is volume and price over time. Bears a close relationship to volume at price, and it's a very important aspect of volume, because first of all the clue is in the word time, because as you know, prices don't go up and they don't go down in a straight line. They congest, they consolidate, they pause for all sorts of reasons. And what the volume, what the VPOC does, as we can see here on the dollar index, you get these sort of bulges at different parts of the chart, and that is where the price has not necessarily stalled. It has simply paused for whatever reason. And if you like, there is what we call transacted volume. There is no, you know, the market is happy to trade within that particular region, and you will build up a range, if you like. I mean, the perfect example is we have here on the dollar index. This is the daily chart. We have the volume point of control, which is this yellow line, and the volume point of control is the area of the chart where it is at its most dense. It was down here at one point, because we see there was the bulge. Then we had the break higher, and in fact it couldn't get beyond, I think it's 97 or something. What is it? Yeah, just below 97. It retraced and started to move sideways, and at some point it moved far enough sideways for this yellow line to jump from here to here. This particular indicator that we have developed to display these this chart structure, these zones on the chart, we have developed that. We've developed it ourselves, and it gives us so much information. Not least, it helps to explain how price moves. It moves, as I said, you will get a congestion period, a consolidation period, as I said, for all sorts of reasons, and then you will get a break, either higher or lower, because in the consolidation, in the congestion period, there is no, as I said, there is no firm direction. Do you get fake breakouts? Yes, of course. That's just the nature of consolidation and congestion phases. And then it goes into this sideways. As I said, it's been in this sideways for, oh goodness gracious, if we see here, it's actually, this is the daily chart. It's been here since November, since the 17th of November. What tends to happen is, this is one of Wyckoff's law of cause and effect. the longer any market is in a consolidative phase, it could be quite happy in range trading, and it is possible to trade on the faster time frames, you know, in between the highs and the lows of the range. You'll see the candles. There's some very wide range candles, so that day tells us, you know, there's some good two-way price action. Then days when the candles are very narrow, and that means on the faster time frames, it was, you know, it's not going to be, you're going to have to grind out a few points here and there for some of the majors. But what happens with cause and effect is the longer it stays in this consolidative phase, when you get a confirmed breakout or breakdown, if you like, from the volume point of control, then it will tend to run, and it will run quite quickly. And what it also does is, what's interesting with the dollar index is we have here, and you see the shading on the VPOC. It's very very narrow. So what we call this a low volume node. So there's little in the way of support in terms of volume, because the volume on this axis also acts, it has its own inbuilt support and resistance zones and also lines. So we have the outermost support level from the VPOC, which is down here in the 92.93 region, and then, as I said, all the way up to 97. Now, of course, this happens, you know, what you see, this chart structure that you see on the daily chart is not, the position of the VPOC on the daily chart is not what you're going to see on another time frame. That it will take the data from that time frame and display accordingly. So that was just a little slightly longer explanation out about, as I said, volume price analysis. It is volume and price, but we also have this additional arm to it, if you like, which is looking at the what the price is doing on the volume is doing and the price on the y-axis. Right, getting back to what is happening today. Now, I talked about pause points and consolidation. This morning was a great example. I'm actually glad we've done it at this time, because I don't know about you this morning, but the first thing I did was had a look at the matrix and the values on the matrix. My heart sank. I know it shouldn't sink, because, you know, not every day can be a brilliant day on the markets. We have to take, you know, what the market gives us. But, you know, I think at one point I had single figures on the hourly chart, and that tells you nothing is moving. And you can understand it. You can understand that because we've had a couple of, you know, Monday was a pretty wild day. Yesterday was a little bit quieter, and also Wednesday, and then today, of course, the market has been waiting for the inflation. Well, some inflation. It's been the CPI in the US, and once that has, you know, that has come out, and the market has actually responded really favorably. And it's a great example of saying, well, you know, why is the market, you know, inflation's come in, I think one of the numbers has come in at something like 7%, which was for December. But you could say, well, that's what the market was expecting. I mean, fundamental news is one of these, you know, can create these events. Traders sometimes get the mistaken idea that bad news, you know, bad price action, good news, good price action. It doesn't work like that. It's really on market expectation. So if it's, you know, if it's very bad, yes, and if it's very good, yes, but if it's comes in as expected, and, you know, so these numbers are coming in, it's really down, is the Fed, you know, Jay Powell keeps saying, yeah, we're going to raise interest rates, and in a way, you know, there's plenty of reasons to do that in the States, particularly with the labor market, which is, you know, according to the figures, you know, the jobs are there if you want one. I wouldn't say there's full employment, but they certainly fulfilled their, you know, one of their mandates. So, you know, everything is, you know, the American economy is going gangbusters. So, you know, you want to cool it down, but we shall see what happens. So that's the reason I would suggest that, you know, yes, it did come in at this terrible number, 7% for December, but it's, you know, a number that's not been seen, you know, for heaven knows how long. And it goes back to what I said last year, you know, sometimes be careful for what you wish for. All the central banks have been wishing for inflation, and now, oh boy, it's a bit like, you know, you poke a tiger in a cage. Well, one day that tiger, you know, is going to come back and bite you. So what's happened is we've had some really, really nice reversals. But just to go back to this morning, so there was something, everything was kind of creeping along very, very quickly. I just want to show you about the consolidation, and this was actually on the Euro Canadian. This is what has happened now. Excuse me, but this is where we were this morning. It was, in fact, this is the 5-minute chart, and we had the volume point of control, as we can see here. This was the on the histogram. It was the you've got this bulge on it here. It was trying to break higher, become lower, break higher, come low, but really it wasn't going anywhere. And it was in a channel. It was actually in a very nice channel around the volume point of control, up at the S1 off the Camarilla pivot, between the S3. And in fact, it did eventually break down, and the euro sold off, and there was some really nice buying in the Canadian. I felt this one was EuroCAD. When it moves, it does move, can move really, really nicely. Now, as we came up to the US Open, that's the US Forex Open, it was a really nice example of being aware of how what can happen at these session crossovers, how sentiment can shift between currencies and currency pairs. And it's something that novice traders, forex traders, aren't always aware that although this is a 24-hour market, it's actually 3 very distinct sessions. And you know, you obviously you get the crossover in the morning, you get the European Open, and you get the London Open. But the transition, when we come to the end, we come to about lunchtime in London, and you know, with the North American session is starting to you know, is starting to come, traders starting to come on board. It didn't actually start to reverse. This is it's actually at 11 o'clock. 11 o'clock, the move started, you know, really came to an end, came to the, in fact, it was to the volume support and price-based support that we see here at 42.35. You can pick it up better on the Renko. Now it's quite interesting about the Renko, because the Renko is devoid of time, and sometimes when you see a move on a time chart, you think, oh, that's a great move, oh, look at that. But when you see how long that move actually took, because one of these little bricks does not complete until a certain number of pips goes through the market. I believe I've set this one at 3, the value of 3, and in fact it's this is the channel that we have on the 5-minute chart. I don't have the volume point of control here, but I have the Camarilla pivots. I've got the S1, we can see here. It actually, in fact, it's gone right back to the S1, and it's trying to get through here. But the most important level, I would say, on the Camarilla pivots is the 3rd level. It kind of corresponds to the point, is it the 0.618, David, of the Fibonacci? I think, yeah, approximately. I think those of you who use Fibonacci perhaps can tell me, and certainly it's something that I need to brush up on. I haven't paid a lot of attention to it recently. I think the 0.618 is one of the most you know, traders really kind of focus on that. And for us, for Camarilla pivots, it's the S3, so it's that equivalent. And price will often, well, first of all, it will pause, as we can see here, it will reverse, and then when it does break, and it can break quite strongly. And this was actually the move for most of the morning. So this, as I said, this is showing at 12. It's about 11 o'clock. But look at the look how quickly it is actually taken to retrace that. So this is what Renko does. Not only does it take time out of the equation, but it gives you a sense of the momentum behind the move. And I know when I pass over to David in about 5 minutes or so, he'll show you the Renkos that we have developed for the Ninja Trader platform, which he uses in multiple time frames. Now, I use the word time frame for Ninja because it works. They work in a slightly different way, but when you see them, you will get the idea. So what happens with the reversal? The way I like to use the Renko, and it's not I'm not recommending it, it's just my way of doing it, because with all indicators, you know, you have to find, you know, once you understand what they do, you've got to find the way to use them that suits you. I think they are fantastic. The Renko is fantastic for entries using levels, using the trend dot indicator, the trend monitor indicator, as I said, the levels from the Camarilla. And what it's also great at is actually keeping you in, which as we always say, is one of the most difficult parts of trading. But for exits, I would actually look at the chart. I would go, if you have them both together anyway, and this is the move that we have on that Renko. As you can see, everything is smoothed out. You've got the pullbacks. There's not even a pullback on that little trend lower, nothing. You've got no wicks, which is fine. And then the key is you look at where you're coming to a significant level in terms of either price or volume, and you just see and support and resistance is, you know, if you have price and volume, then the third leg of the stool is support and resistance, however you display it on your chart. And as I say, we use price based and we use volume based, and this is just such a nice reversal. It's where we use candles. We have a 2-bar reversal. We have an engulfing candle. So we had this down candle here, stops at as I said, it's a strong support because you've got both volume and price. Then you've got the up candle come in, not a massive, as I said, I admit that the volume is still slightly below the average line, but it is in keeping with the range of these two candles. But if you overlay that candle on there, what you get is a hammer candle. Now, we always say one hammer candle, you know, one swallow doesn't a summer make, but it is a strong candle. So you look at, you put you put the volume together, and then you wait for the next one. What's nice to see is you can see the volume actually, you know, moving higher. It does go back into a consolidation phase. You know, nothing goes up in a straight line. And you also have to remember, you know, prices fall much quicker than they go higher. And then by that time, the reversal is starting to be picked up on the Renko chart, and also on the CSI, the currency strength indicator that we have here. I've actually taken all the other currencies because I just want to see what the Canadian and what the euro is doing. And in fact, the currency strength indicator, this is the hourly one, but if you move down, sorry, this is the 5. What have I got here? Sorry, let's have the 5-minute chart one. These extremes, these reversals, if you like to trade reversals, you know, you see them on the CSI. You look at what the chart pattern, you know, what the chart is doing. What is the chart pattern? Are you seeing a 2-bar reversal? Do you have a tweezer bottom? Are you seeing just one big massive hammer candle with a ton of volume underneath that we saw on Monday underneath the Nasdaq? You know, that it was pretty impressive dip buying on Monday. Not sure who was buying the dip. I think a lot of it was the companies themselves buying their own stocks back, but you know, that's another story. So you put all these clues that you have both from the indicators and on the chart, and then that will give you the confidence to take that trade. The trend monitor doesn't start to transition into blue because it doesn't move as quickly as the trend dot. I don't think I've got you have a red trend dot here, as you can see, but it's where it is. It's at the bottom of the candle. So, you've got some you've got some updraft to this move. And of course, you've got the confirmation with the volume. And as I said, you've also got the CSI as well. Now, this is all the volatility from the CPI. What you can do is what we see here. What's interesting, we've had a round trip, is what we call a round trip. We've had a break from the S3, had a lovely reversal set up, both from a candles pattern perspective, a Renko perspective, and we had the CSI, and we've gone straight back to where we started off this morning. And that really does often happen. Where are we? This is about 12 o'clock. A little bit of a pullback. So, yes, you could have done that one and that one. Now, how you decide to play this very very important piece of news. I don't think there's been anything for Canada. The Canadian dollar, I think, is a currency to watch this year. If oil carries on higher, Canada are kind of doing okay. So, and I think I have to check on let's see what they've been up to in terms of the central banks. Yeah, central banks, where are we? The BOC, yeah, 0.225. People are going to start looking at these interest rates differentials, parking their money to, if interest rates don't go higher, and it's looking for yield, I'm not saying a carry trade's not, days off the good old days of the carry trade, but, you've got the RBNZ, you've got 0.75. If commodities are going to go higher, when there is inflation, commodities go higher. There is a narrative behind the movement in individual currencies, which is sentiment. If they're a commodity currency and that commodity is also going higher, there is a reason to buy that currency. Then there's the interest rate differential. So this year is going to be a very interesting year for how the individual currencies and currency pairs behave with all these sort of factors around us. And of course, we still have the pandemic, the virus. I'm just trying to quickly find, where's my trading view, economic calendar, not trading view, economic calendar. Very, very quickly, because I want to pass over to David. So, no, there wasn't anything. Yes, there was Wednesday. Yeah, there wasn't anything actually for Canada. There's only a 5-year bond. The Canadian is also a very interesting currency, because in the London market, the London session, it can be bought and sold really, really strongly, and often can deliver some really nice reversal trades. Now, we had the news has come in. It's been, markets are happy, sentiment is great. And the logical thing is to look at what the yen pairs are doing. In fact, they've come off quite strongly. And the reversal trade that I looked at, I was preparing for this session and the stock session, so I just wanted to highlight it for you, was actually the pound yen, which started to move higher. And again, back on the this is on the 5-minute chart. Again, it's been a move from the volume point of control. London this morning was, I don't know, I just took one look at the matrix this morning, and I said, oh gosh, I just went off and I had some other things to do. But maybe, if you were in London this morning, you can if you did London this morning, just put down in the chat box, did you manage to take some pips, and in what pairs, and if we've got time, we will bring them off. Again, it was a move off the volume point of control. Started off quite strongly, but this is what we call it's not a volatile trend, which is unusual for the pound yen, but it's hardly, there's a lot of pullbacks, there's a lot of pauses. This is the spike higher on the news for the CPI, because the pound yen, like the yen pairs, does reflect sentiment. And you think, well, this was on the 5-minute chart, And this was the hourly chart, and this of itself would have told you that this move was not going to go very far. This was the hourly, because why? We have this massive, well, not massive, but it's a very big volatility candle. You've got a deep wick to the top of the candle, and you know, very often we very often get these candles at news. Volatility momentum is used by the market makers, by the insiders, to suck traders in. You know, traders wait. Oh, I'll wait for the news. Let's see what happens, and I'll try and jump in. Bang, and you know, it rushes higher. In fact, again, support and resistance comes in. It was, as you can see, it was actually off the third level, the R3. This was the move higher to the R3. This was the news, pushed it to the resistance on the VPOC, and bang. What happens with the volatility candle is you either get a reversal, you will get a reversal into the spread of the candle, and if you don't get an out and out reversal, you will then get a congestion. But it looks like, and where's this going? Well, the R3 is the most logical place. But if we look at the daily chart as well, we can see here, you know, what kind of upside do we have for this pair? And it's interesting that the R3 here, also we move over here, you see this is the high back from, where are we here? Oh, back in October. So we are reaching, as I said, again, significant levels for the pound yen. So, you know, there's limited upside. I mean, this is a daily chart, fine, you know, but you know, if we're not from here to here, so this is going to be a very interesting level that we are approaching. Right, I'm actually going to stop there. The last thing I was going to say is, obviously with session crossovers, we've seen the reversals, because we had a piece of news. And if you are an intraday trader, and you know, you've taken a trade in the London session and you're coming up to the crossover for the US, you really do have a decision to make, and that is, do you stay? You know, consolidation will normally follow before the US Open, regardless of whether you have news or not. Do you close out? Do you partially close out? There's no one answer. There isn't a straightforward answer. It really depends on what's happening at you know, at around 1:30, and sometimes you do get what seems to be a reversal, but is actually no more than a pullback, and you will get a continuation. And of course, the next pinch point, if you like, for trading in this time zone is you've got the London fix, which is 4 o'clock UK time, when again all sorts of shenanigans can take place. So interesting in what's happening in Forex. Keep an eye on, I'll certainly be keeping an eye on the Canadian, either the dollar CAD, and certainly the euro CAD is always an interesting one. It does, I don't know why, but it's one of these that when it moves, it can produce sometimes some very nice moves. Right, any questions, please pop them into the chat box. I'm just now going to pass you over to David.
Hi everybody, hopefully you can see my screen. Just have a look over my shoulder. Yeah, looks like you can. Good to have you here. Hope you all had a good holiday, and Happy New Year, belated Happy New Year. I've got all three platforms running here, so I'll be switching around between the three of them. I'm on Ninja at the moment. This is on currency futures. So I've got the futures workspace up here. I've got 6A, 6B, 6C across the top, 6E, 6J, and 6N down the bottom here. And basically, this is the 6J, so this is inversion of dollar yen, so this is yen dollar, which is why they're all pointing in the same direction. If I was on spot, the dollar Swiss, dollar yen be in the opposite direction, dollar CAD. So they're all pointing in the same direction. And actually, it reminds us, one of the really nice things that you get, I'll pull up the spot major complex as well, because you get that inverse view, and I'll show you that in a minute. It's just a really nice way of seeing the inverse of VPA in action, as opposed to, as we are here, it's all in the same direction. So you get this kind of mirror image. It's really nice. Gives you a different perspective all the time. They're still selling the dollar over here. This is on 15. This is the Aussie, the blue line, still rising strongly. New Zealand still rising strongly. So there's still plenty of buying going, still plenty of selling of the dollar, in fact. And we're now, what, 3-4 minutes into the open of the indices. Just go and see what's happening on there. I've got so many tabs open all over the place, forgive me. Let's go and have a look at the indices. As Anna said, wild day on Monday. This was the day on Monday. Massive swings. Not, I have to say, a huge amount of volume, although enough certainly to suggest that we were going to see this recovery. Where are we going to? Probably back up to the VPOC here as far as the NQ is concerned at any rate. That's on the daily, just up onto the 5-minute. This is where we are at the moment, just getting the open underway. Volume at the news, now we're seeing lesser volume come in because we've had all the excitement's gone on with the news here, so it's less frantic, if you will, less volatility, but certainly looking positive once again on the day thus far. So that's where we are with the indices. Let's just go over onto here, pull up the 4, there we go. Right, this is basically the 4 currency indices. So at the top left here, we've got the pound. Top right, we've got the yen index. Bottom left, we've got the dollar index, and bottom right, we've got the euro index. So basically, it's a composite picture of what is going on in terms of those indices created in exactly the same way as the dollar index is. We've created them in a similar sort of way. So you've got this view of the pound, the euro, and obviously the yen as well. Yen has been weakening, starting to go in congestion. This is the dollar down here. This is the one that's been under the cosh, as you can see, trying to rally, not really getting very far. Pop that back down again. So that's where we are in terms of the indices. Just going back to where I was earlier here. Basically, what I've got here, this is on faster time frames again. This is on 5-minute on the currency matrix. This is on 2-minute on a currency array. And all I've done here is isolate out the dollar on the currency array, and I've isolated out the yen on the currency matrix because I want to see what is the general sentiment towards those currencies and how is it reflected across those particular matrix of pairs. The big difference, and I stress this all the time, the big difference between the currency matrix and the currency array is if I click on the settings for either of these there, this is the look back period for the currency matrix. It's only set at 7. You can adjust these, of course. All of these settings are adjustable in here, but that's the kind of default setting that we set it out on the default. So this is looking back 7. So this is very close to the market because we get a lot of emails from customers who say, well, you know, why is the matrix saying one thing and the currency array is saying something else? Because if I do the same thing over here on the currency array, just click on the settings here, the look back period is 80. It's, you know, it's more than 10 times what the look back is on the matrix. So you have to understand that what the currency array is doing is, if you like, it works in a very similar way to the trend monitor. It is smoothing out the bumps, the congestions, the little pullbacks, and so on and so forth, and it is trying to give you a longer term view, if you will. Bear in mind, obviously, this is on a 2-minute time frame, so longer term in that context might only be, I don't know, 10, 15, 20 minutes or so, but you get the general idea is that the currency array will not move at the same speed as these moving up and down here. So if you like, the currency matrix, the way I always describe it is this: if you're familiar with the trends indicator and the trend monitor, the trends indicator works very close to the price action. The trend monitor takes a more considered view of the price action. In other words, it smooths it out. It takes away all those congestion, little pullbacks and reversals that occur. And it's pretty similar here. The matrix works very close to the price action. The currency array steps further back. So if you like, if you are a scalping trader, then you'd be more attuned to using the matrix. If you're more of a swing or trend trader, then you certainly be looking back down towards the currency array, and that's the difference. Because we get people say, well, I've got the New Zealand dollar at the top here. Okay, in this case, they are very close because they're close in terms of time. But then, you know, I've got others up here which are not up here. Why is this at the bottom? Why isn't it at the bottom of this one? So on and so forth. They're always going to be different, and that's the reason why. And it's the same on all the platforms. What you're looking at in terms of both of these is you're looking for similarity in terms of sentiment. What you want to see, if you're looking at the yen for sentiment, you're looking at all of these pairs confirming to you that the sentiment is universal. So in terms of the yen pairs, if you've got yen buying or yen selling, you want to see all of these moving up to the top or all of them moving back down to the bottom. And of course, in exactly the same way as you use charts in a multiple time frame, you use these in a multiple time frame as well. Everything is done in multiple time frames, whether it's charts or indicators. Let's just pop that out the way for a moment. Let's go back on to where are we? The spot currency pairs. Where are we? Currency majors. There we go. This is now we're in the spot market. Okay, so now we've got the inverse here. We've got the dollar CAD, which is inverse to cable, dollar Swiss, etc. And what it gives you is, when you're looking at it in this way, you're looking at pairs from both sides of the spectrum, from the VPA perspective, if you like. You know, you look at things like this on cable. This was the reaction to the news. We had a volatility trigger. It carried on through. We had another volatility, and then we get the highest volume of the session. Under this candle, we get a pivot to the upside. You know, are we going to see weakness thereafter? It's almost inevitable that at the very least you will see some sort of congestion, because this is anomalous. You've got huge volume going in and the market hasn't gone anywhere. It doesn't automatically equate that when you see a signal like that, you think, great, you know, time to go short, it's all going to reverse and collapse back down to where it was. But at least what it will tell you is, don't expect this market to continue up in a nice, you know, solid trend with momentum. Expect this sort of stuff to happen. Expect the market to pause at that point. You've got heavy selling in here, because, you know, there's a lot of traders in here. They've jumped in here. They've made money. Good luck to them in the uptrend. And now they're closing out. They're taking all the money off the table, and that's why you've got this huge amount of volume going in, but the market hasn't gone anywhere. It's all about effort and result. It's very basic Wyckoff. That's what we're looking at the whole time. Are the two in agreement? And in a way, when you look at these candles, you look at, first of all, this one. If you say, well, let's say that's our benchmark in terms of volume and price, and then you look at the next candle that comes along and you think, there's an anomaly here, because the price action here is, it's not quite half this, but it's certainly sort of 2/3. The volume here looks as though it should be higher. That in itself would certainly raise the alarm bells if I was looking at it, because from a purely common sense perspective, the amount of effort to move the price this far, it should be much greater than it's showing here to move the price what is almost double, not quite, but getting on that way. So you expect the volume to be certainly up here. And when you get this massive inrush of volume, you know, you put these two together, and it just gives you a red flag warning that, you know, this is not looking terribly strong for the time being. Now, we get a minor reversal. It's not, traders might trade that, but it's not huge. But nevertheless, it's just giving you that heads up warning that, you know, there is buying or selling coming into the market. And exactly the same way, you see that in a reverse scenario. If I go down onto, well, either of these, actually, if I take the dollar CAD, here we go. You're looking at anomalies all the time. You know, this candle here is anomalous. Why is it anomalous? Because we've got higher volume here, and yet we've got narrower price spread. If this were going to continue as a price waterfall, then you would expect to see the candle here would be that much wider. It'd be down here somewhere with this amount of volume. It isn't. So what have we got here? We've got buying coming in here. There has to be, because otherwise, if it was all selling, the candle will be wide and low and down, and it isn't. It's narrowed. There's buying coming in here. Basically, what's happened is the pressure of selling's coming in. The buyers come in. They buy. They force the price back up again, and that's why you get the narrowing here of the candle. And that's what you're looking at the whole time. You then get this little candle arrangement of three candles moving higher, but what have you got under that? You've got falling volume. What does that tell you? Well, it tells you that the chances are this rally is not going to go very far, because for a market to move higher, you need to see rising volume generally, not always throughout, obviously, the whole trend, but you need to see it generally rising. It isn't, it's falling. What does that tell you? It's telling you you've got price rising, but the actual interest to the upside, if you like, is falling away, and therefore it is unlikely to go very far. And one of the things that you have to accept with volume price analysis is this, and it is actually quite a hard principle to accept when you're starting, is the fact that when you see these signals, it does not automatically mean that the next candle is going to reflect it. You will often see many times, you'll see these signals come in, the price action will carry on for a little bit, maybe go a little bit higher when you're expecting it to roll over, maybe go a little bit low when you're expecting it to rise, and then gradually it will flatten and then it will start to reverse. Do not expect things to happen instantly. It's one of the hardest things to grasp, I guess, when you start. You see a great signal, you see a big hammer or a big upthrust, you think, fantastic, that's it, market's going to rally or fall. Well, it doesn't work like that, because particularly in a falling market, all that selling pressure has to be absorbed, and it takes more than one candle to get rid of it all. And the same is true in an uptrend where you've got very strong buying. That has to be absorbed in the market. Looks like we're carrying on breaking the downside, but these are the things you're looking for the whole time. This sort of thing where you've got falling volume, rising price, doesn't look strong, just gives you a heads up that the rally is, or the trend, the downwards trend is probably going to be re-instigated once that little reversal has taken place. Similar sort of thing on the dollar Swiss. You had buying came in here, lots of volume, big wick to the lower body, and a volatility trigger as well. So you're kind of looking at that as well. And you see this general falling away in volume, not quite so marked. Perhaps we get this little high here, decent volume under there, and the little pivot at the top, just giving us a confirmation signal that we've seen, on that 3 candle arrangement, higher, low, and that middle candle there with decent volume. The other aspect to all this as well is the dear old trend monitor at the bottom here. You remember I talked about it in terms of currency array. Well, it's exactly the same here. The trend monitor, you can see it through here. It doesn't shift. It stays the same color. That's what it's about. That's what it was designed to do. Similarly up here, when you look at it in terms of cable, we come out of this trend, into congestion, we break away through this price action here, we're starting to rally, then we get the move higher, then we go into congestion. Do we get any change? No, just carrying on higher. And of course, you'd be doing this in multiple time frames. So over on the multiple time frames window, can't remember which pair I've got over here. Okay, I've got the Aussie yen. Okay, still climbing the Aussie yen, starting to pick up a little bit of activity, which is why this is maybe slowing a little bit. But here you see it, you've got the trend monitor. This is on 15 seconds, one of my favorite charts. I'm not suggesting you trade it. I'm just saying if you're going to learn VPA, it's a great way to learn, because it will hone your skills dramatically, very quickly, and you'll see things almost instantaneously as they appear. It's what it's all about. Again, you see it here, volume falling, price rising. It's not necessarily suggestive that this is going to roll over and we're going all the way back down to the VPOC, but it's not a sign of strength. At the very least, if the market starts to pull back against you, that's a great comfort piece of the jigsaw to have in mind. So at least you're not panicked into thinking, oh my God, I've got to sell, get out of the market, whatever, close the position, hit the alarm bell. It just calms the emotion. That's what VPA does for you. It just gives you that information, which is your brain is in an analytical mode. It's in a logical mode. It's not in a panic mode. Exactly as I said, this is just, it's forewarning that expect this to happen. So if you see it happening, you're anticipating, it doesn't come as a major shock and trigger that emotional reaction to do something which is so blooming damaging all the time. Because if you're only making small gains, you will make in 10 trades, I've said this many times before, but in 10 trades, you'll make, let's say 6 losses or 7 losses, which can be very small, which is fine. And then on your 3 winning trades, they will be much bigger, and they will far outweigh your 7 smaller losses, or your 6 smaller losses, 6-4, 7-3, 8-2, whatever it is. That's what the game is about. It's about the mathematics, and the most difficult thing to do in trading bar none is to stay in a trade once you start to see a little reversal like this. Because if you got shaken out here and you closed out, you're looking at this now and thinking, blast. Why did I allow my emotion to take hold when, we're now seeing it going out? And now your reaction would be, if you've closed out, and let's jump back in again. Fine. You can do that. Of course you can. But it's, you're trading off the spread, so you're giving back more spread again to the broker. You've got to jump back in. And on Aussie yen, it's going to be much wider. Euro dollar, not so important. If you're scalping in and out all the time, you've got to pick your pairs with great care, because the spread will kill you if you're trying to scalp all the time on widespread pairs. So it looks as though we're going to carry on a little bit higher. And this is the other thing about the currency strength indicators. Pull this, I think I've got them on here somewhere. It just comes up. Maybe I've got them on this one. Can't remember what I've got open where. Okay, no, I haven't got them on here, sorry. I haven't got them alters, but you can see what's going on. And the other thing that you always be aware of with the currency strength indicator, this is on 10-minute. Do not think that once a currency gets to an extreme of overbought and oversold, that's it, that's the end of the rally. You will be amazed at how often they will carry on deeper. Oh, sorry. Just go back over here onto TradingView. Actually, I think I've got them here. Yeah, here we are. This is on, I've got 3, 5, and 15 here. You will be amazed how often that this will stay up here and you think, well, this is going to roll. Okay, I'll take a reversal trade on the Aussie dollar, Aussie yen, find out, I always look at extremes. But they will stay up there. They can, as Anna says, they can stay overbought and oversold for a lot longer than you say solvent. So you just have to be patient and wait. If you're going to take reversal trades, you have to set wider stop losses for precisely this reason, the fact that these are staying up here, the dollar is staying down here for the time being. At some point it will rally, because this market is one of mean reversion. It is the purest market of mean reversion that there is, because at some point these currencies will reverse. They will come back down and the dollar will rise. It's not a question of whether, it's a question of when, and you have to wait and be patient and set wide stop losses as a result. I'm going to stop there because we're going to be back on air in 10 minutes on the stock. So just very quickly to highlight where all the bits and pieces are, you can find them at quantumtrading.com. Those are all the platforms we have at present: MT45, NinjaTrader 78, TradingView, and TradeStation. We are currently working very heavily on NinjaTrader. We are developing the indicators onto the market analyzer. That will be part of the stock program. There are other indicators that we will be developing also for NinjaTrader 2, and we'll probably get those across onto TradeStation as well, specific to the stock program 2. So you can find all the details there. Whether you buy one indicator or a whole load, or whether you've bought one in the past from us, you always get a full credit for it if you're upgrading to something else. If you've got one indicator, you want to go to a bundle or a full package, or you want to go onto the education program, which is over here, the Forex Trading Education Program at quantumtradingeducation.com. We will always give you an upgrade path and give you a credit for whatever it is you spent with us in the past. This is the program. It is the complete Forex Trading program. I know we've got a lot of our students on it at the moment, and we've also bolted in the funded program. Can I just make a plea? I know we have quite a few of our funded traders here. I have emailed all of you personally. We are moving from MT4 to MT5. That will happen at the end of this month. MT5 will be the de facto platform for the funded program. I will send out another follow-up email. There's quite a few I've not heard from. We have to transfer across at the end of the month because that's what we're moving to. And I just want to make sure you close any open positions, because if we move your account across with the balance, we can't transfer over open positions. So all I'm asking for is that if you have open positions, please close them as soon as possible within the next few days. Let me know, and then I can arrange the transfer of the current balance that you have across to your MT5 platform. And I'm afraid if I don't hear from you by the end of the month, then it will happen automatically. I'm sorry about that, but I will send out some other emails. The funded program's been hugely successful as well. It's our money. You trade our money, not yours. There's no risk to you, and we go all the way up to $2 million on that. Finally, you can find all the books over on Anna's site, annacooling.com, all her analysis as well all the indicators, links to the program, and also all the books which are on Amazon in both Kindle and paperback. We're going to grab a quick cup of tea, and then we're going to be back in a few minutes. So thanks very much, Steve, for coming along to join us on this one. Hopefully we'll see you in the next one.